So, with that primer, let's start at the top of the tax preparation process with gathering all of our income statements. And if you are a W 2 employee only, then that's pretty straightforward. You just need to gather your W 2s. And thankfully, much of the information that qualifies as an above the line deduction, if you are a W 2 employee, those things are reflected on your W 2. Things like how much you put into your 401k or your 403b or other pre tax employer based retirement plans. Those will be reflected on your W 2. You will also see reflected the amount that you contributed to health savings accounts, flex spending accounts, and dependent care flex spending accounts. However, if you are a W 2 employee and you have certain investment accounts or have made certain activities, you could still have to gather other pieces of information. Or if you're an independent contractor or an entrepreneur, you definitely will have to gather more information. Things like your 1099s from all sources. And if you are an entrepreneur, that could be something like every vendor with which you've done business, any affiliate income that you earn based on your business dealings. You also could be a member of an LLC or a partnership that distributes a tax document called a K-1 each year that gives the relevant amount of income that you earn from those business endeavors. All of that information has to be gathered when it comes to filing your income. But even if you do not find yourself in those situations of entrepreneurship or property ownership or things of the like, you could still, as a W-2 employee only, have income documents that are easily missed that have to be included with your tax return. The most consistently missed tax document that I see, especially in this phase we've had of high interest bearing savings accounts, is a 1099 INT form. And this is literally just a 1099 from your bank or high yield savings account that tells the amount of interest that you earn on the account each year. Another tax form that you will see for people who have taxable brokerage accounts is the 1099 DIV, or dividend statements that say how much you earned in dividends from any holdings you have in those taxable accounts. You'll also have a 1099 from a taxable brokerage account that shares things like capital gains, both short-term and long-term, or capital losses, both short-term and long-term, based on the investment activities inside of that brokerage account. And even certain activities that you may have completed throughout the year that don't have a taxable impact may still have a corresponding tax document. An example of that would be something like a 1099-R, where if you roll over a retirement account from an employer account like a 401k into something like an IRA, even if it's a non-taxable transfer, you will receive a document called a 1099-R that has to be filed with the IRS to let them know that a transfer or rollover occurred that is not taxable. Once we've totaled up all of our relevant income, we now can start the process of chopping down that income on which we pay taxes, first utilizing above the line deductions.